Hello everyone. Good afternoon. Can we all hear me? Hello, good afternoon. Can we hear me?
Yes, sir, we can hear you, sir.
All right, good afternoon. Thank you for joining. We'll be starting this session now. Just to send a reminder to the main group. Good afternoon, everyone. Thank you so much for joining and welcome to class. We are officially in week 2 of the JIIPCC Mentorship and Internship program for the Fintech industry. I want to especially welcome everyone to today's class, and we'll be talking about, in today's session, we'll be discussing, um, in today's session, we'll be discussing commercial developments of fintech. And then for our mentors today, right, we'll be having, we're expecting to have Mr. Max Ikombe, and we are also expecting to have Mr. Tunde Kelani. Mr. George may be joining us today. He's currently on a flight. So according, he said if he touches down his location on time, he'll be joining us later on. But if he doesn't, he may be unavoidably absent. So we hope to have also Mr. Tunde Kelani join in for the session right now. So we'll be starting off the session, and before we take Nancy's presentation, we just want to maybe just give a little time to our mentors to help us run through the discussion for today. We want to start, unlike last week, we want to start with our mentors discuss for today. We'll start off with Mr. Max talk discourse, and then we'll move on to Mr. Tunde Kilani, right? So group presenters for group 1 and group 2, please do well to get ready for your presentation. But before that, we'll be taking like the discourse for today's topic, commercial developments of fintech from Mr. Max and Mr. Tunde Kilani. So over to our mentors, Mr. Max, if you can, maybe in the next 10 to 20 minutes thereabouts, if you would like to just help us launch into the topic of today, we would really, really appreciate. You are welcome to today's session, sir.
Okay, thank you, Dennis. Good afternoon. Hope you can hear me.
Yes, sir, we can hear you, sir.
Is my sound good? I just want to be sure because I'm using headphones. I hope it's clear.
Yes, sir, it's clear.
Okay, thank you very much. Thank you again. It's always a pleasure and a privilege to be in a JIIPCC mentorship class. As always, I'll thank the organizers, particularly Dennis and Sophie, and then, of course, all the mentees, and, of course, the other mentor who is also on the call with us this afternoon. So I'll just briefly give a quick overview of some of the things I think you should always have in mind when you think about the commercial development of fintech. Just like my discussion last week, I tried to take you back to look at the historical reasons for the legal development of regulations in fintechs and to understand it from the viewpoint of, essentially what we call regulatory arbitrage, where people build new business models along the lines of the gaps that they see in regulation, because the financial services sector generally is a heavily regulated sector. And of course, I explained why we have that heavy regulation, because when it comes to money, at least at the level of banks, the core business they do is financial intermediation. They take money from surplus economic units and pass it on to deficit or to, economic actors who want that money to do something immediately. And then they always return the money back to the people who deposited when they make that demand. And, we explained how that interplay, if there's no regulation, then the banks can simply become mischievous or have problems, and if they pack up, there's what we call a spiral effect, where the moment one bank has problems, it has an impact on other banks, it has an impact on the financial market as well as the money market, and before you know what's happening, there's whole economic meltdown. So, for instance, we all know of the global crisis in 2008. Largely, what caused the global crisis in 2008 was, to an extent, unregulated. Maybe not at that point, we didn't call them fintechs, but it was somewhat like fintechs, like new players who came into the financial services market, but were not regulated like the traditional players, and they began to create very risky products. So, in the case of the 2008 global financial crisis, the main cause was what we call subprime lending in the USA. So, to understand subprime lending, you need to understand mortgages. Mortgage is simply a type of loan given to you to buy a house, and then the collateral for the loan, if you do not pay, how the bank is going to get their money back is that the same house that you use the money to buy will be taken from you and sold, and then the bank gets its money back. So it's sort of the transaction itself, is the collateral is built into the transaction. So what happened in the US was that mortgages, of course, is a very common part of the US economy, and it's a huge part of banking in the US. Most banks, are exposed to, giving out money. Banks and other financial players like insurance companies, because insurance companies, of course, have what we call patient capital. They have long-term money. So they usually, instead of just keeping that money sitting idle, they pump it into things like mortgages. And then they make money for,
Hello,
turn over and
sir.
make money.
It seems your network
Yeah,
is breaking a bit, sir.
okay, so let me move. Is it better now? I confirm, is it better now? Okay. Can you hear me now? Dennis, can you hear me? Yeah, Dennis, can you hear me? Oh. Can you hear me now? Uh, Confirm if you can hear me.
I can hear you, sir.
Okay, so it seems perhaps it's Dennis' network that had the problem. You sure you can hear me clearly?
Yes, sir, I can hear you.
Okay, so I suspect it's on Dennis' end.
Sorry, sir. Yes, sir. It's on my end. The network was quite bad, but you can go ahead, sir. Hello, please, can we? Hello, please, can we hear me?
Yes, sir.
All
Yes,
right.
sir.
Sorry,
Can hear you, sir.
I didn't know my network has been fluctuating and I've been in and out of the call. Sorry. Sorry, I didn't get to really hear Mr. Mark speak all the more on the topic, but thank you so much, sir, for everything you shared while you did. We really, really do appreciate your presence and your continuous support for us within the program and your continuous help to guide mentees to the understanding of the different concepts of fintech and other very essential aspects of it. We have our second mentor also with us in today's class in the person of Mr. Tunde Kelani. Thank you so much, sir, for joining. We are happy to have you in the session. Please, we just want to also give you the floor in the next 20 minutes about, if you can, sir, I would like for you to share your thoughts on the topic for today, commercial developments in fintech. You're welcome, sir.
Okay, good afternoon, everybody. It's good to be here. Thank you for having me. And I think it's been some time that I came around, and so thank you for having me, everybody. To the organizers of this event, I also want to appreciate you for bringing me here. So my name is Tunde Kelani, and I'm just going to be taking you through the commercial development of fintechs, open banking, embedded finance, the world of payments, and all of that. So the good thing is I've worked across all of these verticals. So I'm just going to be explaining some things to you, and also in a way, also be mentioning some big some big brands, so you can see, so that you can relate, right? And when we're talking about commercial development, we're talking about how do we make fintech, open banking, embedded finance, payment generally, how do they become commercially viable? Meaning, how do they make money, and how do you become, do they get revenues, right? And if you begin to look at all of that, you begin to realize, because of course, one of the things you see is that you hear a lot of big numbers. This company just raised $100 million, and you're asking yourself, how did this happen, right? And so it's very important that we have some context in terms of, we can't deny the fact that fintech is reshaping financial services globally. And because one of the oldest trade, or the oldest business, or the oldest activities of man is money movement or value movement, as the case may be. When I mean value movement, I'm talking about the days of where there was no money and it was just trade by barter. There was value that was being exchanged. So value moved from one point to another. And when humans developed money, money automatically also start moving from point A to point B, right? As such, because you do that, um, um, value is being exchanged and value is being moved, right? And then what then happen is, in our own generation, we see that fintech is actually the biggest, type of company or services that is done globally, right? And so you realize that the whole fintech thing is reshaping financial services globally. And of course, there's an evolution. There's an evolution from the banking led, where everything's about bank. And the truth of the matter is, fintech didn't just start now. It started way back as early as 1960 something, right? Where bankers in Wall Street started using technology to help them with predictions and all of those things, especially treasury guys. And it has been owned by bank for a long time. Of course, what then happened is that, because it has been owned by bank for a long time, the technology is very difficult and expensive to build, until in the late 2000, or sorry, I said early 2000s, where we begin to see that internet is becoming free to all. Everybody begin to have access to internet. People are beginning to, develop stuff, and then you begin to realize that people now start coming up with, um, they now start unbundling. There's what called unbundling. Unbundle. When you unbundle something, there's bundle, there's unbundle. People now start unbundling the banking products. So you see one person doing payments, you see another person just doing credit, you see another person just doing loan, savings like piggy vest, you see another person just doing credit like fair money. If you look at the bank has all of this product together. So they now onboarded it, right? You see one person just pick out loan and then make it into a product and begin to sell it to everybody. You see another person just take out savings. PiggyVest, for example, is strictly a fixed deposit account that the bank sells to us. So you see somebody bring it out and innovate around it and then spread it, right? You see another person bringing cross-border payments, right? Which is like FX is usually like a normal, bank activities, right? So you see a company bringing, you can send money through us, all sort of stuff. In fact, you see another person doing open banking, which is, we can give you access to this particular data. You can have access to this data in bank A, bank B, and bank C. Before now, it was never like that. It was the bank that had access to all of those things. So an access bank has access to some of the data of some of the other banks, especially as relations to account, balance and all of those things, right? When there is a theft in bank A compliance officer can ask bank B to please, can you give me the insight into this person's account? And they can get those insights. And also that's also the way where in Nigeria, for example, we have organizations like NIPS, right? That kind of has access to almost all of the players in the industry, and then they can give you data, across all of this banking. So, I mean, we see all of that, but somehow all of these things have been unbundled one by one, and then you now begin to see a whole lot, because of that unbundling, you now begin to see a whole lot more collaboration and a lot of ecosystem play, right? And the reality is, we honestly cannot deny that is like what is giving us an edge in Africa, for example, in Africa. And based off of all of these things that they are doing, the different unbundling, taking this particular product, there's also a revenue streams that has to be developed. So you see different monetization model. So a lot of people say, okay, you know what, transaction fees, it could be just the transaction fees, which is for every time you send money, I'm going to make 15 naira, I'm going to make 10 naira. If you transfer money from money point, for example, to another account, maybe to an OPay, they make it 10 naira or 3 naira, it's 7 naira. Did you get? There's API charge, which is for every time you call my API, I'm going to charge you this amount of money. You see that most often with API as a service solution like open banking, and I'm going to give an example like Mono, like Okra, right? Like even NIPS and Co. They tell you, okay, for every time you call an API, right, this is how much is being charged. Also, for every time you transfer, there's an API that is being called, right? I don't know if you guys know the API is application programming interface, right? It's a way of connecting tech A to tech B. It's a way of connecting the two tech together. So Tunde developed a product, another person developed another product. So we want to connect, we want to be able to communicate to each other, we want to be able to speak to each other. So what API does is I will then create a link that kind of pass information. That's a simple layman way I can explain it, right? It's a way of exchanging information between two tech solutions, right, or two different products, depending as the case may be, right? So for a money point, for example, or a banker to be for a money point, for example, to be able to speak to Access Bank, right? NIPS has created, like, NIPS is all called the central switch in Nigeria. So we have a switch. NIPS has created a middleware solution that all the banks, fintechs can connect to it. So once you connect to NIPS, then NIPS can give you API to be able to speak to money points. So when you want to transfer a money point from a money point account to Access Bank, right? NIPS can help you. NIPS has an API that they so let's assume I'm fair money. I'm giving this example because I want something practical that you guys can relate with. All right. Sorry, just a minute. I have a delivery at the door. Let me just quickly, just a minute. Hello, please come in. Yeah, I'm in a meeting. So sorry. Yeah. Hello? Yeah, so sorry. Yeah. So, say NIMS, for example, is a central switch. It's connected all the banks. It's connected Access Bank, GTB, and Co. Right. So what they simply do is this: I have Fair Money. I want to be able to transfer money from my GT account. Sorry, from my Fair Money to a GT account. So because I connect to NIPS, NIPS has given me an API that I can connect to, and then based off on that, I can transfer money out. Right, because NIPS also have the API of Access Bank, and so information can be exchanged. So that's just the simple API work. This our market is strictly API, right? Most of the things you see are usually API. So you see a lot of that, right? So people make money on that API. For every time you call my API to get information, I can charge you. So people make money based on that. There are also different SaaS solutions, right? Most strategy guys use outside Nigeria though. A lot of them use what we call Bloomberg Terminal, right? Bloomberg Terminal is most treasury guys now. When I mean treasury are people that really deal with FX, foreign exchange in the bank. There are also fintechs now that has treasury guys. A lot of them outside Nigeria, we love them because of our irregular rates and all of that. A lot of people deal with what we call Bloomberg Terminal, and the idea of Bloomberg Terminal is that they can go into that platform to be able to get information about the current rates, right? Bloomberg Terminal is like a data aggregation platform that aggregate all the currency in the world, right? And then give you charts, models, and several things. That just help you give you insight into what is the rate of Ghana cedis today, what is the rate of this particular currency. So, there's a lot of SaaS solution where you just pay subscription. Say every month you pay 5,000, £20,000 or $20,000, as the case may be, right? There's also partnership with banks. Of course, one of the other things also is around challenges around licensing compliance, which is very key in the fintech does not play with compliance and regulations, right? um in open banking, for example, and I'm just going to take it one by one based off of what you guys wrote. Open banking, the way the open banking work is basically customers own their data, right? And what happened is they built an API that allows you to share your data to any bank or any platform. Ideally, the way it works in the UK is I own my data, and I can recall my data if I've given you access to my data, and I can also give you my data. That's how it works, right? And there are several global frameworks that kind of protects you, also protect the fintech itself, right? There's the PSD2 framework, which is, there's the PSD2 framework, there's the GDPR. In Nigeria, we have Nigerian data protection. Even though a lot of people don't read it, but we have Nigerian data protection. So there are standards that you need to align with. So, for example, before you can say how to become an open banking in Ghana, I know of Ghana, or in the UK, for example, right? They are standard, like for example, probably need to have some ISO, what we call ISO 2701, right? Different one, just to ensure that yes, so you have the necessary standard, the necessary compliance standard to collect and assess this data before you can share it. So compliance is very key, right? When dealing with fintech. And in fact, in some country, that is where most fintech spend money. Not even the tech, it's actually compliance, right? In countries like UK is like the financial capital of the world. A lot of people think it's US, but UK, though most UK guys now into Dubai, they are millionaires. But before now, it used to be Canary Wharf, used to be the biggest, financial hub in the world. So you have UK, you have US, you have Singapore, you have UAE. Which other country again is so big? In Africa, maybe South Africa. Nigeria is not there, sorry, unfortunately. But the thing is just that we just have good technology. Nigeria has one of the best technology in the world. Right. So there's the embedded finance, which is also where you can also make money, where most fintech also make money. Some of them. So, for example, I'll give you a simple example. Uber, right? Uber has an embedded financial solution. So you had your card to Uber. So whenever you want to order a car, once you order a car, say I'm going from this particular location to another location, your money is automatically deducted from your account. What Uber has done is they've created like an embedded finance solution that allows them to charge your card every time. So that's a form of embedded. So embedded is not fintech, but inside a bigger product, there is a fintech aspect of it. Do you get the point? So so non-financial companies also get revenue stream from this. There are also different embedded finance. For example, now there's a lot of noise around AI. So there's the AI powered embedded, solutions around AI powered embedded lending that can quickly read your credit scores. And how it does that is very simple. It once you put in your details, maybe your bank account and some other things, it can use, maybe behind the scenes there's an open banking technology or API. You can use that information to assess your credit score or all your details, your transaction, and then you can sum all of that into a proper credit decisioning tool for the credit risk manager, and then they can tell you how much we can borrow you based off on this, right? And based off on that, I mean, some few fintech in Nigeria started using it, right? That they use the power of AI. They just once it sums up your stuff, it can present a proper risk management framework to the credit decision, and the credit decision officer or the credit risk officer can say, "Oh, let's give this person this amount." In fact, it can even suggest how much that they should give to you. So there are quite a lot of that. There's also the AI wealth management app solution that just look at how much you are earning every month, what is coming in, and they tell you, okay, if you continuously save this particular thing, these are the things that you can get, and all of that. So there's quite a lot of them around embedded finance, right? There's also the world of payments generally, which is basically you're talking about cash, you're talking about card, you're talking about wallet, and now you're talking about stablecoin, which is the future, right? Stablecoin is like where everybody is going to. So in remittance or cross-border is called you're moving money from country A to country B. So there's also other cross-border. You have the remittance, right, which is people like Lemfi. I don't know if you guys have heard of Lemfi. You've heard of Nala. You've heard of Tap Send. You've heard of Wise. You've heard of which other one? Send Remitly, and Co. They're remittance company. What you miss is that they're sending money from a very well advanced country to another country, so you can send money home. Right. There's the B2B flows too. B2B flows is businesses in Nigeria that, for example, that want to pay a customer, another vendor in China. So we do the B2B flows in that. There's also the stablecoin rails. The stablecoin is you're not moving. So what they do is, for example, we have CNGN in Nigeria now. CNGN is NGN stablecoin. So what it does is this: you peg that stablecoin. So you peg that token against the naira. So every time naira is 1 naira, that token is 1 naira. Of course, it is just psychology, right, in my head. But I think the good thing is just the tech part because it allows fast movement of fund. So what they simply do is this: if I create a token, I don't know if you guys have done anything cross-border or sorry, Bitcoin, crypto, and all of that. But I'll try and see if I can break it down. If I create a token of a token on the blockchain, right? And I want that token to be 10 billion, say 10 billion Tunde, or 10 billion TND. TND is Tunde, 10 billion TND. And I want to peg it against the naira. What I just need to do is I need to go and look for 10 billion naira liquidity and keep somewhere. So for every time you spend 1 TND, I will remove 1 naira from 1 naira from the liquidity pool I have created. Did you get? So today, actually, most CNGN is pegged against the dollar, right? Not against even the local currency, because dollar is like the global currency, right? So for every time, so if a CNGN wants to increase its liquidity pool, you need to have more USD in the bank as liquidity. So for every time you spend, say, 1,200 or 1,600 CNGN, for example, they will remove $1 out because you have spent it, right? So ideally, it should be pegged against the naira, but because of the value fluctuation, most people rather stay safe and peg it against the dollar. So that's how the stablecoin will. Now, the good thing about the stablecoin is not like it's cheap; it's just faster. It's not like it's expensive, but it's faster. So, for example, with that, I can move money now, right now, as I'm sitting down to South Africa in 2 minutes. Which ideally, if I'm to use my currency, if I'm to put in naira into Zenith Bank, I say, Zenith, let me send this money to China. Zenith Bank will have to convert it to dollars. Zenith Bank will have to talk to their corresponding bank in the US to help them move that money to China. right? Now that can take 1 day, 2 days, 3 days, depending on the relationship with that country. Did you get? So all of that play, and also you've not even factored in compliance, all of that play will make it slow. But if I decide, okay, you know what, today I want to use stablecoin real, it's just technology, it's just API information. Once I say, okay, help me move 10 million CNGN to China, what it just does for me is automatically the CNGN, because it's pegged against the dollar, it already has a rate. It converts instantly through API into USDC. And then it moves that USDC straight up to a bank in China, right? It moves that USDC straight up to either a bank, or a what we call it, liquidity provider, or a banking partner. And so you're able to what we call off ramp. So they will call on ramp and off ramp. You're able to off ramp that USDC to become USD with a bank. And it's because they have lots of USDC today. I see as the largest liquidity pool through Circle network and all of that. But there is Theta coming up too, right? So USDC today has a lot of money that they can use to offset it. So somebody needs to move cash too. And because it's a USD account, people trust them, people can quickly do business with them. Do you get that? So all of that transaction can happen in a split second because it has been automated. So it's faster actually. So yeah. And so I think the last thing for me here is going to be around, what are the future trends? So there's going to be a lot more around fintech, AI. We've talked about all of the different idea of fintechs, what they do across board, how they make money, either through API, through subscription, through what's it called? Transaction fees and all of that, right? But we're going to see a whole lot more around the future trend of fintech. We're going to see more around fintech plus AI, smarter credit system, smarter fraud detection. I could give you insight around fraud detection based off on experience, smarter customer service too, right? Because I think that's also very, very key, where you don't necessarily need to be waiting and waiting. You can simply just, somebody steals your phone or they stole your card. All you need to do is just to chat up with an AI and say, oh, my card has been stolen or my account has been stolen. Can you please block my account? So you go to the website with anybody's platform. It asks for the information you need to provide. You provide your account number. Maybe he asks you a security number, and you give security number, and then automatically nobody can transfer that money from any digital platform. They'll be seen like they'll not be able to transfer it except you go to the bank physically to get it done. So do you get so smarter customer CX, right? There's also, you're going to see a lot around fintech and regtech, which is now that a lot of fintechs are expanding, you're going to see a lot around compliance, which I think most of you here are lawyers, and that's where you most likely build a career on if you want to go in the fintech space. So you're going to see a lot more around legal and compliance, right? How do we move from country to countries? Right. And your compliance also cannot be limited by just your jurisdiction, meaning that because a lot of fintechs by nature need to scale. So scalability is a strong ingredient of fintech. So what it means is that you cannot just stay with the Nigerian legal and compliance. You have to go to other countries. You have to have ideas of other countries. And the easiest way to know is just look at where the countries where we have the travel destination of the world, right? Go and study about the compliance of those countries, understand their system in terms of compliance. That will help you. So when we're talking about travel destination, we're talking about UK, you're talking about US, you're talking about in Africa, for example, you probably want to talk about Nigeria, you want to talk about South Africa, you want to talk about Kenya, you want to talk about Rwanda, you want to talk about Egypt, Morocco, you want to talk about what's the name of this other country, this very small island. I've forgotten the name. So you have to talk about this Portuguese country. I can't remember the name. I can't remember. So you have to talk about all of these countries, right? We're talking about Europe. You want to talk about UK. You want to talk about some European countries like Ireland, Portugal and co. We're talking about the US. The US alone is we're talking about North America, Brazil and co. Sorry, I think South America is Brazil. Yeah. So you have to just know the travel destination of the world in Asia, in the Middle East. You get just go and familiarize yourself with some of the compliance. Have an idea that will give you an edge. Actually, that's a free expo. Then, because there's a whole lot around, fintech is gradually moving to borderless and interoperability. And so because you're going to be doing a lot of interoperability means that you can interact with so many other, platforms. Your compliance has to be strong. So one thing you must know that fintech is not just tech. It's way more than that. It is trust. Because you trust the system, that's how you can put your money on a money point. If you don't trust that, you will not put it. Right? It is trust. It is regulation. It is better customer UX. Right? It's really about collaboration. You collaborate with everybody. No fintech can stand alone. You have to collaborate with your bank. You have to collaborate with the telco. You have to collaborate with several people, right? With regulators, we switch and all of that, right? In 10 years' time, one of thing will it still be called fintech, or will finance simply be an invisible layer of everyday life, which everybody believes that everything is just the way they are saying every company become an AI. People are also saying every company become a fintech. So fintech is not stopping now. It's not going to die now. It's not a buzz that will die, because in as much as the company is set up to generate revenue, every company will still become a fintech, because now it might not be direct fintech. It could be embedded finance. They will still need to integrate some level of embedded finance for payment into their company. So fintech is here to stay. AI and fintech is also here to stay. Thank you very much. I think I used way more than my time, but thank you. I hope you guys got value. Yeah, thank you.
Thank you so much, Mr. Tunde, for your shared thoughts. We really did enjoy your discourse in today's session, and I hope our mentees were paying attention to your shared discussion, and they also picked up from some of the things you said. So we also want to hear from the mentees right about now. We want to hear you based off of the presentations that you were asked to do. Please, if the group 1 and group 2 presenters are ready, we'll be taking your presentations now. You have both 15 minutes each for your presentation. So group 1, please, you can go ahead, take 15 minutes for your presentation. Group 2 do same. Please, the group 1 presenter, you can go ahead, turn on or share your slides rather, and then start your presentation. Do we have the presenter for group 1 in class? Do we have the presenter for group 1 in class? We don't want to waste time, please. If the presenter is not around, the backup presenter or any other person from the group will be able to speak to the slides. We would want to take your presentation. I can help you share slides if that is the case. Oh, okay. So Mr. Tunde may need to leave very soon. So please, if we can we ask questions? He wants to take maybe a question or two. So please, if there are questions for Mr. Tunde, can we ask? Do we have any questions we would like to ask Mr. Tunde based off of what he shared in the last few minutes? Please, we would like to take a question or two. Okay. I want to assume we don't have any questions for Mr. Tunde. So thank you so much, sir, for your time in class. We really do appreciate, or we appreciate everything that you shared with us. We look forward to having you in other sessions. Thank you so much, sir.
Thank you. Thank you so much. Yeah. Thank you.
All right. So please, group 1, since group 1 is well, I don't know what's going on with group 1. Can we have group 2's presentation? Okay, we'll take presentation from group 2 first before we go back to group 1. If they're trying to sort themselves out, please, let's try to do that quickly. Who is the presenter for group 2?
I'm here.
Yeah, all right. Thank you, Blessing. Please, you can go ahead and share your slides and start your presentation.
Sorry, please give me a moment. Group 2, please, can anybody help me share their screen? My document is saying unsupported document type.
All right, please just give me a moment. I will help you do that shortly. Just give me a minute.
Okay. This is for group 1.
Oh, okay. Sorry about that. Sorry about that. Let me bring up group 2 slides. Sorry, I thought. So it's going to be coming up right now. Sorry. Um.
Oh,
All right.
okay.
Can you see it?
Okay. Yes, sir. Thank you very much, sir. Good
Yeah. All
afternoon,
right.
ladies
Please
and
go ahead.
gentlemen. Okay. Good afternoon, ladies and gentlemen, mentors and fellow mentees. My name is Onubless Sidifewa, and I'm the presenter for Group 2. Our topic says the commercial development of fintech, and under that topic, we had several subtopics. So I'm just going to dive right in. The first one on our slide is evolution of contactless payment technology. Before now, there are various systems of payments before the world started evolving, before fintech came around. But then, during our group research, I noted that contactless payment technology dates back as 1990s, the 1990s, and the first contactless payment that was made in South Korea in 1995 with a prepaid travel setup called UPass. In most of us that watch Korean movie, we notice that whenever they want to enter a bus, there's this card they always use. They click it, It's a QR scan. You just place it on top of the payment system, and then you are settled and you goes in. So that's how this contactless payment came about. Then around the same time, mobile they introduced a speed pass this thing in US, United States. This prepaid key enabled customers to make fast and convenient payments for fuel at participating gas station. That means you don't need your ATM cards, you don't need to do transfer. You just use this speed pass to pay for your fuel at gas stations. Then in 2000s, Freedom Pay they launched one of the first mobile payment platform in collaboration with the Bank of America and McDonald's. And then this milestone is laid the groundwork for future mobile payment. Sorry. Then in London, the London's Oyster card revamped travel payments. That's you don't need to book your flight. It just streamlined journey for millions of commuters by reducing the hassle of after purchasing your ticket, you now have to revalidate it again. All these um notable inventions, they brought about the contactless payment technology. Then however, the floodgate for digital payment system, it opened in 2010. That was when Google Wallet, Android Pay, Apple Pay and the rest emerged as pioneers. They enabled users to make service contacts with smartphones. That means you can use your smartphone without the need of cash or ATM cards. You can use your smartphone to make payments and all that. This liberated consumers from the need to carry physical payment cards. That means you don't need to carry your card, you don't need to carry money around. You just use your smartphone to make payments anywhere you go. Then bringing it to Nigeria, contactless payments in Nigeria, it evolved rapidly. And then the key drivers of this contactless payments, they are fintech innovations, even widespread NFCs. I don't know if people know anything about NFC, near field communication adoption. Then they increase the presence of contactless enabled terminals. Key players like Verve, we have the Verve, we have PalmPay and so forth. They are central to the shift, issuing millions of contactless cards. They issue you ATM cards, especially Verve. They've issued over 100 millions of cards to Africans. And then in Lagos, there is this transport system in Lagos. They integrated this contactless payment. It's called the Cowry Card Key Drivers Cowry Card. They use it for their transport system. I don't know those in Lagos whether they've encountered such before. Like I mentioned before, the key drivers of this evolution, they are fintech, and then the local players leading the way like Valve and the rest. Then moving on, to digital wallet and mobile payments. I'm just going to be rushing because we have a lot of top topics to discuss. Then moving on, digital wallet and mobile payments. We already know what are digital wallets, but I'll still explain it. Digital wallets are like electronic wallets, like apps. They use mobile devices features to give better access to financial services. There are many digital wallets. We have, for example, we have MetaMask. I don't know if anybody knows about MetaMask. We have Rabbi, all these wallets, exchange, all of this digital wallet, which means you can even link your bank account or wallet. They make use of seed phrases, just like bank. When you open a bank, they give you a BVN number. But and digital wallet, once you open a digital wallet, they will give you a seed phrase. That seed phrase is like your BVN, just in case you lose your password. If you lose that seed phrase, your own is gone, which means you can't access that wallet again. So you have to keep that seed phrase the way you safeguard your BVN. Someone can hack your digital wallet with that seed phrase. They're also known as e-wallet or mobile wallet. It is an electronic device, online service or software program. It allows one party to make electronic transaction with another party. That means you don't need cash. You make your payment to another person without the need of carrying cash around or even your ATM cards or even POS. The digital wallet is already on your phone. If you want to make a payment, you open your software, the software on your phone. You already have the wallet of the person you want to make the transfer to. You copy the address, you click on send, and then you're sending the amount of money you want to send to the person. You can even purchase items either online or at point of sale using this mobile payment. So where a physical wallet is a tangible item you use to carry and store your valuable items such as cash or credit cards. This digital wallet is an electronic software program that stores and manages various forms of digital currency or even financial assets. I mentioned PayPal, Apple Pay, MetaMask, Rabbi, all of them they offer convenience and security by replacing physical cards with digital alternative. Mobile wallet on the other hand, or mobile payments on the other hand, they're a subset of digital payments. They are conducted using a mobile device. If you notice, this digital wallet and this mobile payment, they are almost the same thing. But this mobile payment is a subset, that means it's under digital wallet. And then it includes credit and debit card payments, digital and mobile wallets, and bank transfers. Common mobile payment method include you can use mobile wallets, user store payment information digital. I've already mentioned that one. And then QR code payments. I'm sure all of us we know what QR code payment. I've mentioned in Korea they use this card, U pass card for their transport system. I think that's like a QR code something where you just place it on the payment system and then it settles you. And then moving on, the cryptocurrency and blockchain in payments. I don't know much about cryptocurrency and blockchain payment, but I'll try my best to make you understand. What are cryptocurrencies? Cryptocurrencies are like digital financial instruments exchanged and recorded on public ledgers. Those public ledgers are known as blockchain. They do not require any central intermediaries like commercial banks for clearing settlements. No, cryptocurrency they rely more on blockchain technology, a fully transparent digital decentralized ledger. It records transaction and other data. Unlike traditional payment system, they don't require any middleman, no bank, no blockchain, only blockchain payments and peer to peer, allowing direct transfers between users. That's the only thing I know about cryptocurrency. So please pardon me. I'll just move on to cross-border payment solution. Cross-border payment solution. Cross-border payment solution. Cross-border is like receiving money from another person outside your country or between two countries. Financial transaction between parties in different countries or businesses located in different countries. It is vital for global trade and it enables individuals to send money to family abroad. Most of us we have family abroad, and sometimes even though I don't know how they make use of Nigerian banks to transfer money to us, but sometimes they use that. But then the fintech came, fintech came and brought in solutions. You don't need what's it called again? I've forgotten. You don't need Western Union to send money to your relative in another country. The method system are easy. You can use digital wallet. The digital wallet I talked about, it offers fast and cost-effective transfers. You can even use bank wire transfers. That's traditional for large sums, but that one is very slow, and the amounts they might charge is big. And then we have payment gateways like we have Pioneer, we have Stripe, we have Clasher, we have cryptocurrency again, we have PayPal, we have Gray. There's this app called Gray. I don't know if you work with white people. Most Nigerians they use Gray, especially those that are into answering questionnaires for money. Those companies that give you questionnaires to answer, they won't pay you in naira. You have to set up a foreign account before you are able to receive your payments. So Gray is one of the key apps that you have to install and link to your Nigerian bank account to receive your payment. So Gray, you can also use Gray. It's an app. You can also use Gray to receive money from someone outside the country and so forth. I've mentioned digital wallets before. Digital wallets are very secure and very fast with little or no NFC at all. Then we have specialized fintech platform. They provide solutions like Clashia and tools. They focus on specific market, not general for everybody, just specific markets. Then moving on to the future of payments. Sorry, Mr. Williams, can you move the slides? Mr. Williams, are you there? Okay, please be going. Can you move to the second aspect of the subtopic, like fintech and financial inclusion? Okay, moving on. We have another
On which slide
subtopic.
is it? On which slide is it? So that I can just quickly move there.
Go down, 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 down. Down, down. Under financial inclusion. Yes, yes, yes. This one.
This.
No, no. Go up, go up. Go up. Okay. Okay, I'll just start from here. Thank you very much. So moving on to our second subtopic, we have fintech and financial inclusion, access to financial services in emerging markets. We have so many subtopics under that. I'll start with um a microfinance and fintech collaboration. We all know what is microfinance. Microfinance, they provide financial services for low-income individuals and groups who are excluded from traditional banking. They offer them small loans, savings accounts, insurance, and other financial products. Even they even sometimes they offer scholarships to students, microfinance. And then imagine microfinance and fintech coming together. They will do great things together. If microfinance can on their own provide all these services to low income individual, imagine them collaborating with fintech. From my group we made for my group during our research we noted successful collaborations with between microfinance and fintech. For example, the Orange Money Group and fintech company Jumo, they partnered together to enhance digital financial services across Africa, not just Nigeria alone, the whole of Africa. And the collaboration, it aims to extend Orange Money Group services to include additional microcredit solutions for unbanked population. Then we also have a collaboration with Banku and Tala and the rest. And then the key benefits of this collaboration is that it expanded access to financial products. That's fintech companies, they provide microfinance banks with innovative solutions to offer a broader range of financial services, including microloans, savings, and other insurance products, other financial products. Then enhance customer experience, lower operational cost, unlike commercial banks, innovative risk management, and so on. Mr. Williams, hello? Hello?
Yeah, hello, sorry, my network got disconnected. Please, I will soon bring up your slides. Can you just kindly continue?
Okay, okay. Then moving on, fintech and financial inclusion, access to financial services in emerging markets. What are the key aspects to fintech in emerging markets? We have digital payments, microfinance, mobile banking, financial literacy. All of these are key points to note. Then the challenges in reaching the unbanked population. Digital literacy. Many unbanked individuals, particularly in communities where there is no light, no means of getting information, no skills, no knowledge, and all that. How do fintech reach these people that don't know anything? They are not knowledgeable, they are not digital literate. What are the challenges fintech faces with these people? One, we have digital literacy. Many people in Africa, there are still some areas in Africa where you go to, they don't know anything about computers, they don't know anything about what is happening in the world. They are still focused in their own, oh, which word will I use? They are still in their own era. They've not yet accepted evolution, yes. So this is one of the challenges in reaching unbanked population. And then trust issues. People like me, I don't trust all these financial companies, fintech companies like that, especially OPay. Once my money pass 30K in OPay, my heart will be beating. I'll be like, what will happen to my money? What if I wake up one day and the money disappears? So imagine if there are more than 10 persons like me that have such trust issues. There is problem now for fintechs. And then we have poor connectivity. There's no inadequate internet, and then power infrastructure is very low, especially in rural and remote areas, and it hinders the adoption of digital financial services. Then physical distance. Imagine where you live inside the village, and then the only bank available that you have access to is in town, which means you have to travel like 5 hours to go to bank to do what you want to do. That's one of the challenges in reaching unbanked populations. Data security and cybercrime. Data security and cybercrime. Hello, what is happening? So let me continue. Data security and cybercrime. We all know that everything out there is encrypted in data form. There is no way you will do something without scammers attacking. So fintech companies, they face the risks from cyber attacks and the need to protect sensitive consumer data, a crucial aspect of maintaining consumer trust. If fintechs, they want to maintain consumer trust, they have to protect and be sensitive, very sensitive with their data and their consumer data, so that nothing will happen in that trust their consumer have betrothed in them. Moving on, we have a social and economic impact of fintech driven financial inclusion. There are so many impacts of fintech driven financial inclusion. We have economic impact and social impacts. My group, we noted many things under economic impact, so I'll just highlight a few. We are fostering economic growth. That's one of the economic impacts of fintech driven financial inclusion. It provides affordable and accessible financing services to undeserved population, particularly in low income and rural areas, promoting economic growth. Then poverty reduction. One of the economic impacts of fintech driven financial inclusion is to reduce poverty. If it increases the access to financial services and promotes economic growth, then why not? Fintech will contribute to poverty reduction and improve a standard of living. Social impact. What are social impact? We have social inequality. They can help to reduce inequality by providing financial services to everybody. It's no longer for a certain group of people. They will reduce social inequality by providing financial services to everybody, both young, old, women and men, and even those in rural communities that don't have access to financial services. We have digital financial exclusion. There's risk of digital financial exclusion, obviously. But however, large social and political costs can be addressed by fintechs to reduce digital financial exclusion. Data privacy and cyber security. They must prioritize data privacy and security to build trust with users, which means fintech companies, they must increase their security, they must tighten their security so that cyber attackers will not penetrate and destroy the trust they've built with their customers. Thank you very much. I think that will be all for group two. Hello.
Hello, can you hear me?
Yes, yes.
All right, thank you very much for your presentation. Sorry about my network has been a little bit bad in today's class, so my sincere apologies about that to everyone and to the group. Please, I'm not sure if group one is ready to present. If they are, can we still have group one presentation? Okay. All right, seeing that we cannot have presentation from both group one and group two, please, I would like for us to, from group one rather, please, I would like for us to try to work on our availability for class. Please, if at all you would, Mr. Joseph, are you trying to say something? Okay. I was saying that if at all, if at all,
Sorry, sir. I wanted to volunteer. I'm not the presenter for the week, but just to give a bit of what we've done in the group for group one.
all right, you can go ahead, please.
All right, thanks, sir. Please, sir, can you help share the slide?
I'm doing that now. Please go ahead and start. Okay, can you see my slides? Or can you see my screen rather? Hello, Mr. Joseph, can you see my screen?
Yes, I can, sir. I can.
All right, please go ahead.
All right, thank you, sir. So, I'm not the presenter for the week, but based on the discussion on the group and my personal research for the article, I'll just give a brief outline of what we've done for the week. So we're given the topic, the outline for our group, and I will start with that now with open banking. So basically, open banking is the regulated sharing of customer bank data with third-party providers via secure application programming interfaces. Yeah, so hold on, sir. Yes, so what this means is that it is basically, let me just call it a concept by which financial platforms share customer data with third-party providers, third-party platforms, so as to ensure for financial transactions. And on that, it was introduced to Nigeria by CBN, the Central Bank of Nigeria, in 2020 in its 2020 Open Banking Framework, which is basically one of the regulatory frameworks. So I will discuss the regulatory framework for open banking now. So open banking basically, for example, you can have some other financial platforms which do not have your data. You can basically, by virtue of open banking, the bank, your financial platform can share your information with them so as to carry out financial transactions. And now we have the regulatory frameworks, and the first is the Central Bank of Nigeria. And there, the first that we have in the slides is the operational guidelines, which was passed in March 2023. So these require relevant organizations, that's the third-party providers, the financial platforms with the customer data, to comply with basically with standards around things like data sharing, consumer protection, and stuff like that. And under this, we have the first one that I have there is basically the CBN circular on open banking framework. And this mandates that banks that are involved in it should publish open API for account information, payment initiation, and confirmation of funds. So it requires that third-party providers are to be licensed under the payment service provider regime of Nigeria. And then the second one that we have here is the open banking registry. So obviously, like organizations that can participate in open banking, they are assigned into 3 tiers, namely tier 0 to 3, which these tiers all have different levels of technical and technical requirements. Things like API security, data encryption, and risk assessment. So these things all have to play a role in how the platforms have to work. So the open banking registry provides that they should all be listed under it, registered under it. And there's also the Nigerian Data Protection Act. Well, actually, it was first the Nigerian Data Protection Regulation that I can say was regulating open banking, at least with regards to consumer data, we have things like consent, the requirement of consent, but it eventually evolved into the Nigerian Data Protection Act, NDPA, which was passed in 2023, June 12, 2023. So it enforces data protection in the country, at least in this context with regards to open banking. So now we'll be moving to the security and privacy concerns with open banking. So I'll list them out and just give a general explanation of them. So we have things like sharing your keys with the wrong people, data privacy, fraud risk, system glitches, and responsibility confusion. So looking at that, first of all, I'll just basically classify them into basically things like cybersecurity breaches and unauthorized data exploitation. Basically, if a person shares their keys, their passwords with the wrong people, with the wrong platform, one which is not quote and unquote licensed and is not well protected, this can lead to cyber security breaches. You may mistakenly give maybe your password, maybe relevant information, vital information to the wrong person. And then there's also the issue of data privacy. Now that the transfer of information is no longer linear between the financial platform and the customer, is now from the customer to the financial platform and to third-party providers, and they can number in tens. It depends on how many the customer uses. Now, the data privacy issue becomes glaring because at this point, it's no longer just one person, one financial platform that is handling the customer data. Rather, it is transferring them about to different other third-party providers. And then there's fraud risk. That's also a cybersecurity breach when the framework for protection of the customer is not strong. There may be there's risk of fraud to the customer, and there's system glitches. So the open banking essentially it depends on both the financial platform and the third party provider both having a very solid operation at the time of the financial transaction. If the financial platform has an issue at that point, then the third-party provider can't retrieve the data that is needed to carry out a financial transaction. If the third-party provider has an issue, then there's no transaction to be made in any case at that point. So it is very important that they are both fully functional at the time of the what's it called now? At the time of the transaction, and there's responsibility confusion. Like I said, the transfer of information is no longer linear. It's now from the customer to the financial platform, then to various third-party providers, as the case may be. Now, the impact of open banking on traditional banking models. First, we have the loss of monopoly on consumer data, on customer data. Now, the financial platforms no longer enjoy monopoly. Now, they have to share so long as the customer actually requests it. And based on the framework of open banking, they have to share it with other people. The third-party providers no longer have to build up their own information repository from the ground up. They can rely on that which has been built by the bigger and more developed financial platforms. And there's new competition from fintechs because of course data monopoly and of the ease to use, at least for the customers of the third-party providers. And of course, this has had an impact on traditional banking models because they've been forced to improve customer experience. If the traditional banks, quote and unquote, do not act right, there's the possibility that the customer can effectively distance the relationship. It may still exist, but can distance their relationship with the bank and rely on the third-party providers for lots of things. So there's that. And there's new revenue opportunities for bank. Because open banking is also a source of revenue for the financial industry. And there's higher compliance and security demands. Since now they are sharing customer data they have to ensure the previous framework for security and compliance obviously would not cut it because it has not taken into account this particular this particular type of transaction, this arrangement. But now that and that is the reason why there are lots of regulations that are now providing for these financial platforms to follow. There's the NDP, there's the NDPE, there's the CBN circulars, and so forth. And there's consumer adoption. So consumer adoption, well, this one, there are adoption barriers as there is majorly for fintech in the first place. Basically, we have a situation where a substantial part of the population is not yet very trusting of fintech altogether. And probably this because of low awareness, they are not well aware of the protections afforded, of the various regulations that are afforded to the to the customers in participating in fintech transactions. So there's low awareness, there's fear of fraud. This still ties into low awareness of the regulatory framework. And there's digital literacy gaps. If there's not sufficient smartphone awareness, smartphone penetration, and even if there's smartphone penetration, there's still the requirement of how to use it. So if that is not sufficient, there's no way. This is a financial issue. People would not put their money in places that they do not have at least a modicum of control over how they use it. If they don't understand it, they won't use it in the first place. So that's just it. And there's greater trust in traditional banks more than in fintechs. And in order to build trust in open banking, there should be strong regulation. But there's already strong regulation, but it could be stronger, and there should be more awareness of the regulations, the framework in place to protect the customers, and there should be transparency and consent. And the NDP already provides for this. Like, it provides that there should be informed consent before the data of a customer can be shared with third-party providers, and obviously there should be security guarantees. Now, moving on to embedded finance. So embedded finance basically refers to the integration of financial services into non-financial platforms. And for example, now is the integration of financial services into non-financial platforms like ride-hailing apps, e-commerce sites. Examples of those e-commerce sites is like Jumia, Amazon, and then ride-hailing apps. You have Uber, Bolt. When you pay for your ride on Uber or Bolt, you're using embedded finance. When you pay for your order on Jumia, you pay for your cards, you are using embedded finance. And basically in Nigeria, this phenomenon is basically propelled by the youth who are more tech savvy. It's not by the older generation. It's not by the older generation. And embedded finance really helps it create his, at least, because you can track everything you do. You understand what is happening with regards to one particular aspect of your financial expenditure. Okay, you are using your ride-hailing apps. This is how much you're paying. Everything happens on the app there. You don't have to be moving about from here to there to do that. And then examples of embedded finance services include the buy now, pay later, and then obviously embedded payments by e-commerce sites, the ride-hailing platforms, and all those things. And now the integration challenges of embedded finance with existing systems. Well, the first one I would say is basically the use of outdated enterprise systems that lack compatibility with modern APIs and financial technologies. Oftentimes, when they want to use, oftentimes these embedded finance structures, they run core banking platforms that have been developed over a decade ago. And when you compare that with the more modern, with other modern platforms, I mean, there's a mismatch. There's a mismatch between these two, between the parties in that transaction. And this complicates the development of like reliable experiences, reliable embedded experiences, and it raises risk for both the platform and the financial partner. So there's another issue there, which is basically data silos. When information is not when it is not connected enough, when it is not interoperable, there's a prevention of real-time accurate customer and transaction data. Basically, when this happens, the parties to the transaction when they are using embedded finance cannot all get cannot get the data at least at the time when they require it. So it just makes things harder. And there's technical complexity. Embedded finance, obviously, based on the regulations, it requires someone that is not only well versed in the financial aspects, the financial regulations, is also the legal aspects. There's also the technological aspect. So now to engage in it well, at least for the developers, you have to, those are already um, three different categories that there should be sufficient proficiency to engage in embedded finance. So there's technical complexity and there's also security and risk management that's to be guaranteed for embedded finance platforms. But despite these integration challenges, embedded finance has also provided for opportunities for small and medium enterprises. So these small and medium enterprises, these are enterprises of a certain scale within Nigeria. And the first one that I would say is new revenue streams. So for instance, now under this, I would say that it helps improve access to financial services for SMEs, that's small and medium enterprises. So normally now, historically, many of Nigeria's SMEs, they've always, well, suffered, let me use that word, or underserved by formal banks due to like perceived credit risk. They are not really deemed credit worthy by traditional banks. But when there's the introduction of embedded finance, the transactions carried out on other platforms can provide a perspective into the credit rating of the SME and whether they can pay their loan, their credit at the appropriate time. So that is one opportunity. So it gives access to new revenue streams such as loans, mortgages, and things like that. And then there's another one, which is also the enhanced customer experience. Obviously, now you can get, like for instance, like I said earlier, it's really easy things up for the persons using these embedded finance platforms because, for instance, now for Uber, for ride-hailing apps such as Uber and Bolt, you can pay on the app, you can do everything on the app. You do not have to say, okay, let me move on to my Access Bank. Let me do all these things. It's not like that. And there's also the fact that some platforms, some e-commerce platforms, they also provide insurance for their goods. Right there, you do it. Normally, if you want, generally, people don't even get insurance for delivering because, they have trust, quote and unquote, that it will get to them. But if they do want to get, you do not have to go to an insurance firm or stuff like that. You can just get it directly there. Everything happens there in a matter of minutes. If you wanted to do that now, you will fill a form, you do this, you move here, you move. It's already too stressful at that point. So it enhances customer experience and there's better access to capital. That's what I said earlier with new revenue streams. Since they can easily deem SMEs, can deem what's it called, can determine how creditworthy they are. It gives these enterprises better access to capital, and there's also operational efficiency that also plays into it. And now the roles of technological platforms in embedded finance, they play serious roles. For instance, there is the integration of APIs into connecting platforms. Basically, when you say this, I think what I interpret to be is that basically the platforms are like distribution centers, or let me use conduits. Basically, they help by they interact with customers, and this data that they get, they can use it to what's it called? They can use it to connect with other financial platforms or stuff like that and basically provide a better service. So the technological platforms connect different platforms together. And then there's development of modular financial services such as wallet as and there's data and analytics. So this data and analytics, basically, it means that now data is basically like the currency with regards to embedded finance. So the platforms that hold data, they now function as what's it called? they now function as conduits of information. For instance, now, and they help to ease transactions. They help to ease financial transactions. For instance, now, some companies, they use, many companies actually, not some, they use payroll platforms to pay their employees wages. And when these payroll platforms, when they have access to employee wage files, they can ensure that there is little risk in paying employees their wages. It comes at the right time, like clockwork. If it is to come by 12, it comes by 12. If it is this amount, it will not be in naira higher than that. That's guaranteed already. And then, however, this brings up some issues, at least for me personally. Like, since these platforms obviously that are transferring the information, obviously, it brings up questions like who owns the data. Obviously, it is not when this data is gotten from financial platforms and transferred to non-financial platforms, maybe somehow who owns the data and who monetizes it. But then again, the NDPR already provides that the platforms are to seek user consent to share their data with financial partners, obviously. So I guess that answers the question. And for regulatory compliance with embedded finance, well, well, it's loose actually, considering that embedded finance is a wide-ranging concept, and it depends on the nature of the services rendered on the platform. What works for Uber will not work for Jumia. What works for Bolt will not work for Amazon because of their different nature. One is a transportation business, one is a commerce business, one is, so they are very different. And then there's licensing and oversight for engaging in financial services. So obviously some of these platforms, they have to be registered to engage in these transactions to be able to get customer data and things like that. So and then there's also the issue of insurance. If you are providing insurance, there should be compliance with some laws that relate to that. You can't just say I insure and that's it. Or you have to comply with some laws relating to insurance, despite maybe not being an insurance company. And then there's know your customer and anti-money laundering requirements. This just helps to provide a better framework for understanding the 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 customers and also preventing the commission of crimes using fintech platforms. And there is data privacy requirements which are already covered by what is it called now? Which are already covered by the NDPA. It requires that um, the data privacy requirements under the NDPA requires that the Data Protection Commission rather has emphasized that the consent which a customer must give before his information can be shared must be specific, informed, and freely given. And then there's the last one, consumer protection, which I mean there are no which is a given. The customer has to be protected at all times from extraneous circumstances. So on that note, I come to the end of the presentation for Group 1. Thank you, sir.
All right, thank you so much, Mr. Joseph, for stepping in to present on behalf of your group. Well done to you and to your team for putting the presentation together. Please, I would just like to encourage us, right, that please, if in the instance where you have been assigned a task like maybe presenting or something, and for some reason you may not present in class, do well to talk with your other group members, do well to speak to the group leader so that your team can find a way to better manage that, so that we don't have the instance where we are in class but there's nobody present on behalf of the group. And the work should be a group work, so we expect that mentees within the group who have obviously contributed to the task should also be able to give, just like the way Mr. Joseph did, should be able to speak to the slides. So thank you once again, Mr. Joseph, and well done to you and to your team, and also to Group 2 and to the team to you both. Back to Mr. Max. I can see we still have Mr. Max on the call. Thank you so much, sir, for your patience in today's class. Please, we would like to ask before we day, right? We would like to ask if you have any thoughts for the class, if as regards their presentations, and also anything you would like to add, sir.
Okay, Dennis, thanks. My apologies. I'm kind of out and about, so my network was really bad. I couldn't even finish my earlier presentation, and then I was only hearing the presentations in and out. At least I saw some part of it, and I want to commend both teams. I thought they covered the ground quite well. Unfortunately, I couldn't finish my earlier thought, but the summary of what I was trying to say earlier was that the commercial development of fintech simply follows what I had mentioned before. So the whole idea is you go to a particular industry where the key players, any financial industry where the key players face a lot of regulations, and you try to look for any commercial opportunity within that sector that you can carry out without facing those regulations. Essentially, what I had said before. So, I listened to part of Mr. Tunde's presentation, and he covered a lot of the ground. He talked a lot about the different types of fintechs, particularly the payment system, payment integration, and all of that. The only thing I want to add is that there's also a huge new part of fintech that is opening that is beyond payments and all of that. Now it's about wealth management. So we have a lot of fintechs now that operate like securities and exchange operators. So they're able to issue assets, digital assets now, not payment, not fiat. Because I think Group 2 talked about cryptocurrency. Cryptocurrency can serve as money. That is where you use it to exchange as value for goods or services. But we need to know that cryptocurrencies can also act as securities or as commodities. That simply means that they can become something you want to buy and wait for its price to go up and then you sell it. So you can see that in that scenario, the cryptocurrency is not functioning as money. It is functioning just the way you buy shares. You buy shares at 50 naira. You wait until those shares become 100 naira. You sell them, you have made a 100% return. Or you buy land at 10 million naira. You wait maybe when government builds roads and the neighborhood becomes improved, the land now sells for 15 million naira. You have made a 50% increase. So sometimes cryptocurrencies and other digital assets function that way. They don't always function as money. So because of that, the first regulator in Nigeria that recognized digital assets and created a whole value chain around them, our regulations around them, sorry, was the Securities and Exchange Commission, when they first of all launched guidance on offering of digital assets. Of course, currently now they have a full robust framework on virtual or on virtual, what they call VAS, virtual asset service providers. So there are different categories of fintechs who can now play in that space, who operate just the way traditional capital market operators, would operate. So currently under the virtual asset service providers framework of the SEC, you have four broad categories of fintechs. You have the digital assets offering platforms. So a digital asset offering platform essentially is a platform that enables you to issue digital assets. So that operates just like the traditional issuer of securities or issuers, for instance, of bonds. I'm sure some of us might know what bonds are, but bonds are simply a promise, by an issuer, usually maybe a company or a government entity that wants to raise money. So they ask you to give them money and they promise to pay back with a certain level of interest. So I think we understand it. So that now becomes a bond. So there are corporate bonds, there are also government bonds, there's also what we call Euro bonds. So under the VAS framework, the digital assets offering platforms essentially operate in a similar way. So it could be anything from issuance of an initial coin offering for a cryptocurrency project or a blockchain project that comes under that category. The next category is digital assets exchange. So just the way we have commodities exchange, essentially a marketplace with uniform rules. where people buy and sell goods. So the way a typical exchange works is that the exchange is a meeting point where both of you meet to buy and sell the goods. So it could be anything from shares. It could also be commodities like minerals, gold, iron, or any other precious minerals. But the important thing about an exchange is that the exchange regulates the rules on how to buy and sell. And of course, there are more complex things that are built on that basic platform. So what we call futures or forward trades. That's essentially where you are selling goods that you do not already own, but you are selling them for a value and then hoping to deliver the goods much later. So I won't go into too much details about that. Then there's also the digital assets custodian, because in a typical capital market scenario, when you come to the capital market to raise money, there must be an independent third party, a trusted third party who's going to be the custodian, who's going to hold the asset, so that if anything goes wrong, the investors who put their money into that scheme will just go to that custodian and get their money back. So in a usual scenario, the bank usually acts as a custodian. But what the vast regulation has done is that they understand that sometimes the assets in question are not physical assets like money and all, digital assets, cryptocurrency, or such other assets. So the digital asset custodian is the equivalent of a regular custodian who is a custodian of digital assets. And then finally, the last category is the digital assets intermediary, which involves any other number of players. So it could be what we call a broker dealer. Broker dealers are like stock brokers, people who help you to trade your assets. So people who help other people to trade their digital assets can register as digital assets intermediaries under the SEC vast regulation. They are portfolio managers, they are trustees, and they are investment advisors, just like the usual ones we have in normal transactions, but now for digital transactions. So I just wanted to bring out that part, that there's a whole new fintech play that currently the SEC has enabled. Currently we have about 2 fintechs already registered under what the SEC calls the Accelerated Regulatory Incubation Program, which is just a sandbox that the SEC created to allow innovative fintechs come and register on an interim basis under the regulatory overview of the SEC while they develop their business. The idea for a sandbox simply is that because some of these technologies, the regulators don't understand the risk fully yet, and they don't want to design regulations that would stifle the industry. So what they ask the players is that come and register with us. We'll give you like an experimental phase where both of us keep looking at your business model and see how it grows before we allow you launch out fully into the market. So that way, when you launch fully into the market, the regulators understand your business model and can design regulations that would support it, while at the same time ensuring that there's safety. So, for instance, when you're under the regulatory or the sandbox, the number of new customers you can onboard to your platform are limited, and then you cannot expand beyond a certain number. That essentially is an experimental phase. So, just wanted to bring that context up. These are some of the new grounds that fintechs are breaking. I mean, fintechs have gone far in Mr. Tunde described to us in the payment space under the CBN purview. They have gone really far. But in the wealth management, capital market space, they have not gone as far. So there's a whole new area opening up, for fintechs to play in that sector. So I wanted to just bring that context. So thank you, Dennis, and back to you.
All right, thank you so much, Mr. Max, for coming back to still share your thoughts and complete your thoughts from what you were discussing before the network kind of logged you out at the first time you were speaking. So please, we would like to take questions for class. Do we have any person with questions? We're about to round up session. So please, if you have questions, please do well to ask your questions right about now. Do we have questions for the mentees? Do we have questions? Do we have questions? We can take a question or two. Please, if you have questions, go ahead and ask. Okay, in the absence of any questions, please can we turn on our videos for our quick picture? Let's just do that quickly. I'm sorry, my video has been causing my network to disrupt. I've been in and out of the session because of my network. So please, let's quickly do that so that we can call it a day. Okay, thank you, Mr. Bolu. Thank you. Please, can we have other people turn on their videos if they can? Okay. All right, so we have done that. Thank you, everyone who complied and turned on their video. We have come to the end of class for today. I hope we really did learn a thing or two from everything that we shared or the mentor shared in today's session. Hope we do well to share what we have learned with online while we post. Please do not forget to fill in your attendance, and do not forget to also carry on or follow up with tasks that will be given up to you. So thank you everyone for making it to class. See you all next week. Goodbye and enjoy the rest of your day. Thank you, Mr. Max, for your time. We really sincerely do appreciate. Thank you so much for being on the call. Goodbye, everyone.